Welcome back to Growth by the Numbers, the show where we break down what it takes to scale efficiently, understand the numbers, and continue to push and drive organizations and companies to become sale ready. I'm your host, Tyler Briggs. It's been a few weeks. Over that course of period of time, we've been working with multiple entities, and we wanted to bring up a topic today that seems to be really kind of plaguing these entities, and really what I've seen throughout my career, plaguing almost every entity I've been a part of. There's a difference between, that startup, the guys that are really just trying to figure out what they're doing, those that know what they're doing, but don't know how to do it profitably, and those that have learned those prior experiences and have finally made that pivot to grow by the numbers. So we're going to start out today, getting involved in some of these organizations. They're more on the startup ground. They are more interested in just trying to fine tune their product, right? And it's interesting to make this correlation to understand the differences between really these nuanced stages of a business, right? These roadblocks or these uh, how they've been called in other groups, kind of milestones, these metrics that are kind of arbitrarily out there for organizations. It's you got to break through your first million, then 3 to 5, then 10 to 15. Yes, at each level there's different education that founders have learned that they have, kind of found themselves out. But those dollar figures, they're arbitrary. Um, you can get into a commercial contractor that can go land $100 million contract. And that might be the first $100 million contract, and they're going to start tranching $10 million a month. You can find yourself very quickly into something where your product is, a $10,000 to $15,000 product, and you got to 10 million real fast and kind of just fell in your lap. There were a couple things that you may have understood, you may have studied, you may have YouTubed, or it was just the school of hard knocks, but the difference is in these companies that kind of go from seed or angel, kind of that first, I have an idea, I want to get into business, to those that move towards the I'm in business, I'm making it happen, I have employees, but now I want to scale. I want to get into the next level. I want to get into multi-states, multi-location. So today we're gonna break some of those down, and really what I've seen throughout my career and throughout some of my consulting career, and talk through what it takes to kind of get through each one of those stages. And then obviously how there are groups like mine or other groups out there that will help bring some of that education that we've gone through our school of hard knocks, and we'll try to help accelerate that. So hopefully you yourself, or your organization, do not have to go through those same years that we've had to go through, and really accelerate your growth. So to begin, kind of that angel seed, the initial, I have an idea, right? These are the guys that they eventually worked for some people or some organizations for so long. They're tired of kind of dealing with some of the nuances that company has, and they feel that they can do something better, or they can feel they can do it more affordably, or they feel that, the specific company they're with might be charging too much, or whatever the story is. There's a reason why, this individual or this group of people have decided to spin off and create their own entity, create their own company, right? There's a desire. We commend those entrepreneurs, those that risk it all, that put their personal life on hold to put everything they have into an idea. That itself is risky, and it's scary, and it's something that's uncharted. It's kind of not natural. Um, at least in recent years, right? The entrepreneurial idea to create something from nothing, it's scary. And a lot of these entrepreneurs, these guys that are just starting out, sometimes people have made the comment, "Oh, I wish you could just help me out on the side," or "Oh, I wish you were running your own company. You're so nice. Your other people in your company have not been so so kind or so forthright. And there sparks the idea. So now this entrepreneur's created something. They've started telling their friends and family. They threw a magnet on their car. They've done something, maybe dabbled a little bit and meta marketing, boosted posts, something to just get a name out there. But they don't know what they're selling and they don't know what to sell it for. Oh, okay. Chuck in the truck. I've got an AC system. I'm buying it for $3,000. I want to make a little bit of money on it. So I'll sell it for $5,000, and then I'm going to do the install. I want to make $3,000 to do the install. That's about what I was making. I was making maybe $1,500 or $1,000 or, something of that nature to go do the install when I was working for so-and-so. Therefore, they're like, all right, I'll sell this system for $8,000. Meanwhile, a much larger corporation that has the people, has the call center, has everything else behind us, probably $4,000 or $5,000 more for that same unit. And they're thinking, hey, we're selling this at a great price. I'm really helping customers out. But they're missing a few things. They don't understand what it's going to cost to warranty that unit. They're not going to understand what it costs to, work with that consumer, that customer that constantly is calling. Maybe they don't like the noise anymore. Maybe it's not cooling as much as it used to, or, now they smell something funny. Or they're just calling because they're that customer that unfortunately you got into business with, and that will be your forever customer who always has something wrong with that unit and expects you to take care of it for free. Or same thing in a plumbing perspective, or even in consulting or other service related businesses, right? There's a reason why we've all gone into something. We think we can do it better, stronger, better. And understanding the product that you're selling, the true cost of goods sold, the true, way you should be selling this, or the true price point you should be selling this, also based on your sales model. Are you heavy in offering discounts? So, you feel that there's a value to the consumer. What's your model, and how have you built that into your pricing? These are all vital questions that entrepreneurs should be able to ask and answer. And if they haven't, unfortunately, it's going to be one of those demise things where you're going to go through some school of hard knocks. You're going to misinterpret what you should be selling your service or your product at. And unfortunately, it will come back. It will haunt you. You're going to start not understanding why all of a sudden you went and collected $40,000 or $50,000 or even $100,000 in a week. And you look at your bank on Monday morning after all your payments have gone out and you're going, man, I've only got $3,000 left. Question is why? Why am I generating this cash, but it's all going to other people? Why? Because we're missing the key important components to understanding the pricing model. And that's something that everybody runs through. Everybody at the beginning of time. What do I sell this at? How much money do I need to make to sustain my company? Oh, well, now I want to grow. What do I need to do to make sure that happens? Right? So we've got price point one. We had the idea. We had the thought. I'm going into business. Great. What am I selling? How am I selling it? What am I selling it at? Now there's kind of a next component. Outside of that, we get into a world of cash management. And, at this point, companies don't understand the importance of, what we nerds would call data, right? Everything that a company does is a data point. When did I start? When did I turn my car on? How long did it idle? How long did I drive? How many calls did I take? How long was I on that call for? How long should it take? How often am I going to boost a post? What's that cost? How many people did I get? How many leads? What did I book them at? All right, what's my booking rate? All these things that we've previously talked about are kind of these next metrics. We've had the idea. Congratulations, we're so excited. Absolutely, we're getting into business. Great, I have an idea of what I'm selling. I think I know what I should sell it at. Oof, now I'm selling, but I'm not seeing any cash. I'm still broke. How am I going to pay my mortgage this month? How am I going to put Christmas presents under the tree? How is Santa going to come and create something memorable for my kids when I've got no cash? Well, understanding these key metrics and these key numbers are what help develop that cash. What's working capital? What's a cash flow? What's a 13-week cash flow projection? Does it have to be 13 weeks? Doesn't it kind of scale down after that? What's the difference between what's in my bank account and what I profit, what I make, what do I earn? I don't understand that. My CPA tells me I'm making this money, but I don't see the cash. I don't understand why. I've worked with multiple organizations where they're in this startup phase. This entity's been created with this idea's gone to something, and the founders are ripping 200,000, 300,000 a year off a business that's maybe doing $1 million in revenue. Well, that's where the profits are going. It's going to people's pockets, but there's 5, 6, 7 owners. So each owner's maybe ripping 50,000 a year, 60,000 a year, 40,000 a year. And they're wondering, gosh, I'm still broke. We're doing okay. We made $1 million. We produced $1 million in sales, but I'm not growing. I'm stagnant. I can't get over the $1 million. I have no cash. I don't know what's going on. Understanding what your business needs to eat, AKA those dollars. What does it need to fuel itself? How much money does it need to eat in order to continue to go? How much money does it need to eat in order to grow? How much money has to come into the business that's going to go right back into the expansion or into the growth? Or are we just going to be okay being stagnant? These are key important figures. And I've worked with so many companies that just don't understand this, that just constantly on each call they run, each consumer they talk to, or each customer, it's a different price point because they learned from the last one. And then they get 1-star reviews, or they get negative comments, bad word of mouth. Now cash flow's tight again. Don't make these mistakes, right? Understand these key numbers. Build a simple 13-week cash flow. It doesn't even have to be 13 weeks. Just go 4 weeks. Understand what your next 4 weeks looks like, right? It's simple. Revenue items at the top, replacements, plumbing, water softeners. Is it webinar revenue? What are your different revenue verticals, right? Those line items, what makes up your revenue? What is it? And what does that look like over the next 4 weeks? Do I need to collect 10,000 a week, 50,000 a week, 100,000 a week? And from each one, if you have multiple verticals, what are those revenue streams and what should they bring in on a weekly basis to get your total top line? From there, you drop down and you run in your payroll, right? We're going to run another segment, right? We're going to create a little space in our Excel sheet, and we're going to put another table of information. We're going to throw payroll. What's your office payroll? And then what's your, if you're doing something in the field, what's your field payroll? Or what's your service payroll, right? What's my cost behind that revenue? And then how much office payroll do I have? Then how much taxes are going to be expensed? If you're using a payroll company, what's your payroll fee? So we know, all right, I got $50,000 coming in this week. I estimate that I've got $7,000 going out this week in payroll. All right, I got $43,000 left, right? I went from 50, spent 7, I got 43,000. Well, now what's left? What vendors do I have to make payments to? What software am I paying for? And that should go for this week. What am I doing? What expenses do I have going out this week? Who am I paying for what? How much marketing dollars can I afford? So let's go through the SG&A, and then let's separate out marketing at the bottom. So here's all my basically general and administrative expenses. Here's how much I'm going to spend in truck repairs. Here's how much I anticipate to spend in software, in phone service, both answering service and cell phone or mobile services. How much am I anticipating in spending with other vendors? Do I have to pay a supplier today? All these items have to be discussed and lined out. Bam. Now how much am I going to spend in marketing? I've got $500 going to Meta every week, which if that's what you can afford, great. If not, throw a little bit more. If Meta's the one that's bringing your money in. How much am I going to Google ads, Google local service ads? What am I doing, right? Where's all my money going? So I went 50, spent 7. Now I'm on to the next chunk. So I had 43,000. Well, let's say I've got $40,000 going out between everything else administratively, everything else in marketing. So I'm ending the week with $3,000. That doesn't mean that's what you made. All right, that's not your profit, but you're gonna be $3,000 up for that week. Well, what's next? Now we roll it into the next week. So how much is my current bank account at? I'm at 10,000. I added 3. Now I'm at 13,000. Now the next week, again, I've got 50,000, got 7,000 in payroll, but instead of having $40,000 in expenses, I might only have 10. So I went from 43, spent 10. So I'm at 33 left. Plus I had 13. Now I'm up, $46,000. Okay. But now the following week, same thing. I'm up 50, but now I spent $63,000. Now, right, we're seeing how we've got cash in, what my cash out is, and am I bringing in cash at the end of the week, or am I losing cash at the end of the week? And then we can estimate what our cash balances are, so we understand if there's ways that we can pull a lever to get more revenue. Let's say that $3,000 we had extra in cash, and we're looking at our 4-week projection, and we see that we're going to end with, maybe an extra $15,000 in cash, and the company wants to grow. Well, can we now afford to spend a little bit more on that marketing dollars based on all these other numbers that we've got, all these other metrics that we haven't talked about yet? Can we invest more in marketing because it looks like these channels are working? Yeah, absolutely. We've got the cash. We've got the cash flow. Let's make it happen. So now we put more money into the business because we're growing our top line. Revenue. That's the importance of understanding these figures. Where's my cash coming? Where's it going? Now I understand if I can pull different levers. Let's put more money in marketing. Pull that lever. Great. Revenue's gone up. Revenue's up. Expenses are relatively in line, other than my marketing went up, which correlated to me wanting to drive the revenue. We're staying in line. We're hitting metrics. Cash and liquidity. How much cash do I really have? Hey, based on my accounts payable, my accounts receivable, my undeposited funds, my total cash value, my total inventory value, how much cash can this company generate right now if we liquidated everything and had to pay everything off? Where are we at? Now we've got working capital. Now we know how much working capital we have to reinvest in the business. Now, most service businesses often have a negative working capital. It's not a big deal. That's why cash flow exists, and that's why private equity continuously invests in these trades. Your cash flow will always prevail. If you're profiting correctly, that cash flow will ultimately end up flowing back to the ownership's pockets. Next, understanding some of these other key metrics, right? So we understand that we don't have pricing. We got to fix that. We've got to look at our cash flow. Well, now, what are these other metrics? We've talked about some of them. We've talked about our marketing metrics, what our ROAS is, what's our booking rate, what's our cost per lead or cost per acquisition, right? Our CAC. There's all these different metrics that are going to help us understand, just really honestly help us understand the lead flow. So if we're investing that extra cash now, right? We've determined that we've got pricing. We've figured that out. Now we've got cash flow. We want to spend an extra $1,000 a week in marketing. So which channel do we put that in? It's a great question. As an owner, you might feel, hey, I see a lot of Meta ads and I see a lot of people getting to us from Facebook. Okay, well, that's a gut feeling. How do you know? And that's where we've talked about some of these marketing metrics, right? We get into, well, how many leads were generated? How many were booked? What was that cost? And what was the revenue, right? What is our return on ad spend? And that's where you'll start to determine where that extra cash can be spent. All right, hey, maybe it is Meta. Maybe Instagram and Facebook is where your clientele are at, where your customers are at. It's where they see you. It's where they call in on. It's the links they click. And so, what we should see is a reasonable return on ad spend, hopefully a 4x or greater. 3.5 maybe. That's a little low. But we're hoping that, we're seeing some decent return. So we see that Meta is the one that's doing it. Maybe Google's at, a 4.1, 4.4, but Meta's at a 5x. So for every dollar we're putting in, we're getting 5 back. We're profiting on that revenue. So we put the money into Meta. Ooh, well, now that we put that extra money into Meta, we see that it's actually having a decline. We're not converting. We're getting the lead flow, but we're not booking. And then those that we do book, we've dropped our conversion rate on it. Well, what does that tell us? Where are we going? We either start looking at our sales or we start looking at our creatives. Maybe the creatives are bringing in clients that are customers that aren't exactly the customer we want to look at. Maybe the demographics changed. Maybe, maybe we're just having a weird spell going on our ads. And so all these, what I've learned here with working with some of these entities, all these have a deep correlation. And it's the school of hard knocks that bring a lot of that correlation or understanding of these correlations together. And all these groups out there that are out there trying to, hey, come do my webinar or come do a live event with us, $500, bring you and a guest. And we're going to do this 3-day incubator. We're going to do this 3-day lesson. We're going to do this, this big event. And they don't teach this. They teach some of these other metrics or these other things to chase and to look at. And, it's great because it brings ideas. It gets people's minds flowing, but it doesn't give them enough to change. Google, they start talking about your Google score, your Google rank, and where do you rank on your maps and how strong is your brand in that area? That's great. It's a great thing to work on. Do they have the money to work with someone to help? Do they understand how to change that ranking? Do they know if they can even afford to do that? Everyone's going to say they can't afford not to. But what does that really mean? What does it mean to go from 1 million to 3 million, 3 million to 5 million, or these other milestones, these other, break points or breakthrough points or whatever they're called out there? It creates, owners need the visibility. Owners need the visibility to understand what's happening in their business and understand where they might be weak. And that's why Growth with the Numbers is out here trying to preach and help owners understand these key components. I've worked and I've partnered with operators where their goal was to get to, 9 figures. They want to get to 100 million, or they want to get to, even 10. They want to get up there and hit the $1 billion mark. And what I've seen there is this difficulty in understanding how to hit it. Working with a healthcare group. Nephrology was kind of the name of the game. Working in dialysis centers, working with these nephrologists, these physicians, growing and scaling and kind of consolidating. Well, a group had come up with a concept of, essentially what private equity does. So they came up with this MSO, management service organization. And they were like, we are successful in our market because we have scaled, we have the understanding of these metrics. How many patients do we need to see? What's the cost to obtain that patient into our practice? How many recurring or repeat patients do we have? How much revenue is created? How much what type of services, and what do we bill? In the case of healthcare, what are our contracts? What are our negotiations with the payers, the insurance companies? How much of Medicare or Medicaid is it? What are payment terms? What's the billing cycle? They learn these things, right? And their school of hard knocks over decades of building a, very strong 9-figure revenue company, they decided, hey, we're going to be able to help other nephrologists, build their platform. So we're going to create this management service organization. We're going to bring a lot of this to these other physicians, and we're going to help them scale. We're going to help them grow. And sure enough, they did. Sprinkled some fairy dust, brought these metrics, brought these tools, which really all boil down to FP&A. And they brought these tools, they brought these metrics, and they brought it into other practices, and they charged an exorbitant fee. I mean, they charged, and they made a lot of money, to the point that a private equity group bought in for over $400 million into this platform and decided to just scale it. And at the time when I was working with them, I was brought on to really help more on the scale side. We were buying 3 to 5 practices. I mean, we were spending 20, 30 million a month on buying up smaller practices and putting them under this platform, and then helping them scale again by buying smaller practices, putting them under the umbrella, and pushing and driving, these different markets. And, we created this nationwide, phenomenon in this specific industry. And then we were really driving some other metrics, but what it all boiled down to is a dialed accounting process, a dialed close process. With as many companies as we were working, I think we had our close done by the 20th of the month. And we were really trying to shorten it up and get it to the 15th. But I mean, we were moving about 175 million a month in overall revenue at one point. And understanding the accounting process, how those accounting, accounts are established, your chart of accounts are established, how it correlates to your cash flow, how it correlates to your profitability, and how it correlates to your price point. How much are you charging for your service? Now in healthcare, there's really what you're negotiating with your payer, and there's medical billing, and there's all these other items. But you have to understand how to guide your physicians to proper patient care, but also profitable patient care. We were doing $175 million a month nationwide, dealing with simple $100 to $300 interactions. They were not excessive, extensive, and large interactions. Sometimes there were transplants, and those were bigger billings. But for the most part, they were between $100 and $300 billings, and we were doing $175 million a month. And it all boils down to these key numbers that we would sit down with the owners every month. With another organization I was a part of, this guy was the startup, and it was so simple. We were working with him to just understand what he was doing. And in this case, he was HVAC, and this was before I joined on with a much larger group. And he was in HVAC, and we were working with him. We helped understand his chart of accounts. We helped grew that chart of accounts so he could be a little bit more granular. And really, we trained that owner and his wife on how to manage these financials and not just think of them as a secondary. And the importance to that, help this guy go from $80,000 a year to almost $1 million a year in under 3 years. And that's all we did. All we did was just implement the simple things of just a simple set of QuickBooks, and that was it. That was the switch. It was a flip of the switch for him. He and his wife, bam, $1 million. Then we jump into other groups. It all boils down to having that strategic partner, right? It doesn't have to be you as an owner, just that strategic partner that is going to help. Hey, here's what you should be selling it at, right? If we want to make our margins, if we want to make money, this is what we should sell at. Here's how, right? Based on how you're selling. Here's what our cash flow looks like. So if you want, you as the owner, if you want to push your revenue, this is what we can afford. Okay, let's do it. Well, now we're tracking that. Great. This channel's working better than this one. This one's better than that one. So we know where to push the money. Great. Now we're profiting. Now we're growing, and we're growing successfully. Right now there's profits. Then you've got to have that guy, because kind of profits are unnatural, right? The more money a company makes, the more they spend. And this is where owners get in this rut. That right strategic partner, once you start getting into that perspective, that right strategic partner is going to tell you, no, we can't spend that money. Let's keep it. Let's keep that profit. We might be able to reinvest that in other things, but now we have free cash flow, and now we have profitable returns. Now we have positive working capital because we're invested in these other things. There's so much to explore in finance, and there's so much to explore in these numbers that we've barely scratched the surface. And what matters is bringing in the right strategic partner who understands the vast scale of finance. Because we haven't even touched banking. We haven't even touched investments. We haven't even touched what to do with that extra free cash flow. We haven't even talked about how partnering with that right bank, partnering with all these other items will bring more success to the company. But that's it for today. Remember, starting with the idea, we've got to figure out what our expenses are behind what we're selling, what price point to sell that at. And then the cash starts. Now, what are we doing with that cash? What's it look like in a few weeks? What's it look like in a few months? These are all key components that a strategic partner like me, like any other FP&A guy that's successfully done this, will be able to help you know what levers to pull so you can scale your company to these breakthrough points that these other entities talk about. I believe it was Alex Hormozzi, and I can't remember. I think it was doom scrolling one day. And I think he said it best, right? He had a mentor. He had someone talk to him and said how profit is unnatural, right? And because of that unnatural state, these companies would just spend it, right? Money, spend. And you need that guy to step in there and go, no, don't spend it. And that's what all these items help understand. That strategic partner is going to be able to look at your cash flow a few months down the road. Where's your cash cliff? And tell you what you can do with that cash. Then it's up to you as that founder and say, yeah, well, I want to invest in this. I want to invest in that. I want to grow the company. Then we get into the other metrics that we've talked about, some with marketing, some with operations, and all that helps pull those levers. That is the importance of that strategic partner, of that guy or gal that is going to drastically change the financial trajectory and the financial growth of that organization. So I leave this with you today, that focus, go find that strategic partner. We offer those services. We offer them very affordably. And I would just recommend that you find that strategic partner. Whether you're looking to just get your price points dialed, or you're looking to get into your cash flow, or you're looking to get all the way into, you already have some of those items, but now you want to scale. You want to become that 9-figure revenue. You want to become the 100 million. Well, it takes a lot to get there. And you got to make sure you have that right strategic partner to do it. So that's it for today, guys. This is Tyler Briggs, again, your host with Growth by the Numbers. Looking forward to hearing any comments, any feedback, and if you have any questions, again, reach out, info@growthbythenumbers.com. Looking forward to hearing from you guys.